Evening, everybody. It's 5:34, and this is your closing comment for Thursday, the 9th of June. And in case you didn't notice, we're beginning to have kind of a summer market, that being a market that gets thin when it goes in one direction or the other. And it could not have been more obvious than this afternoon when the selling started a few minutes before 3 and the loss in the market over doubled. It was a pretty heavy day, too. Yesterday was 4.3 or 4.4 billion shares. Today, we closed down hard on 5.3 billion shares. So you never want to see up days where volume is getting lighter and down days where it gets heavier. Of course, most of this is in anticipation of tomorrow's, as they're referring to it, Super Bowl number of CPI. Everybody and their brother has something to say about it. I, on the other hand, do not. But it ought to be pretty interesting. I'm just looking at the market without the news and seeing things that I really don't like. As I've said repeatedly, we were going to have a nice counter trend bear market rally. I was looking for 4,200 to 4,300 on the S&P, but we didn't quite get there. We did get to 4,200. We didn't get to 4,300, and today we closed down 97.95 to give you an idea of what that looks like on the chart. I'm going to get rid of this gasoline chart, and I'm going to go to the S&P, and here we go. So we got right up into this area that I was looking at resistance, with this end, the upper edge of it at 42.98, 43 or so. We made a lower high, we made a lower high, and we continued, and now we've fallen through the bottom of this, which has held pretty well in this area of 4071, 4072, and 2 days ago 4076. So we came through it. Now it's true, we do have this big CPI number tomorrow, and we could go in either direction, but there are too many things that I'm noticing that are disturbing. One of those things is debt and financing. I'm using the HYG, which is the high yield corporate debt, and it has been down 4 of the last 5 days and 6 of the last 8 days, and that does not look good. When you add that to companies that are not doing as well as they expected and are already substantially lower, and are companies that finance their sales with people like Affirmed, you got places like Stitch Fit, SFIX, and that one is down about $2 tonight at 6.5. Let's just remember that this was a real darling, and that the high on it is, let's see, 113, and today it's trading at 661, down 208, or 24%. You cannot have any kind of a bull market with companies that lose that kind of equity on a single earnings report. Another one like that, DocuSign. Everybody loved it. I loved it. It was a pandemic sweetheart, and it reported a beat in revenue and a miss in earnings. This is a stock that um, late last year was 314. It's trading 66.35, down 23.72, or 26%. this is a pretty major company. This is something that most people who work either from home or just for convenience sake use to have signed documents. And yet it's down 77%. Um, Facebook became Meta today, officially, symbol META. Didn't seem to matter, as I have mentioned before. You can't put lipstick on a pig. This was 184.75, down 11.89, or 6%. Tesla, which got upgraded by UBS this morning, was trading 670. Pardon me, 770 in pre-market, 767 in regular hours, traded all the way down to 717.98. That's 770 to 719.78. And it closed, the last is 719 and a half. That's down $6.10. Mountain MTN, which is Vail Resorts, went the other way, uh, and was down as low as about 245 on their beat on earnings, and turned around and traded up to 263.60. Last is 262. That's up $5.50. Signet, which I was short a couple of years ago from the 135s down into almost single digits, reported a beat today. The new CEO who came in about a year and a half ago was very impressive. In her interview, the stock is 67.83, up $5.63, or 9%. So the Dow broke on that last hour of selling. It went from down 200 to down 638, 1.94%. The biggest loser was the Nasdaq, down 332, or 2.75%. S&P down 97.95, 238%. The Russell down 2.12%, down $40.15. And the transports, which were a huge loser yesterday, continued today to be a loser, down 288.73, down 2.06%. Advanced declines on the NYSE were almost 5 to 1 to the downside. Nasdaq almost 3 to 1, and as I said earlier, we actually saw an increase in volume of about 25%. I know tomorrow's a big number, but it's just a number. It's backward looking. You know how you feel about spending money. You know what it takes to, go to a gas station with an SUV and have the pump shut off at $75 and not have a full tank. So those are real problems. Okay, let's take a quick look at energy, because that has continued to be outstanding. The crude oil down 60 cents, but hanging up there in the 120s, 121 and a half. Heating oil up almost 9 cents at $4.40. Gasoline, 427.60. That's up another nickel. And just so that you know, even here in Massachusetts, the first number on the state's average price is a 5. And as you can see, after this huge run up in a period of 10 days from this is a wholesale price, from 342 up to 432. We only came down for 2 days, and we're now back to a new all-time closing high on gas. Now, the one that we've been playing the most is the NAT gas, and yesterday's fire, an explosion at a processing plant in Texas, in Freeport, Texas. I didn't understand the news yesterday, and I feel vindicated today. Um, this just means that there's going to be more nat gas staying in the ground here, and not having enough space to really store it. Nat gas does not store as easily as crude does. And so it has to be liquefied and it has to be shipped. And so, regardless of what it looks like here, it's still horrendous in Japan, a country that has no natural resources, in uh, Eastern Europe and the EU in general, where there are sanctions on the Soviet gas. They need this, and today, after yesterday's high of 966, this morning's low was 801. Now, we've seen this before, but each time it has turned right back up. And again, that's exactly what it did today. It traded as low as 801 and as high as 903 and closed 896. Looks just like this. And that's what we had afterwards. This is definitely going to double digits. Also, one last item I want to mention, A.A.I.I numbers. Remember, this is a counter indicator, contra indicator. And the bulls went from 19 2 weeks ago to 32 last week, back down to 21. That's down 11%, and the normal number is about 38. So it's not much above 50% of what it normally should be. Bears went from 37.1 to 46.9, up 9.8. Historical norm there is 30%. That's 50% above. And the group that I watch actually kind of the most is neutral, or as I tend to put it, I don't have a clue, was 32.1, and that was up 1.2. And that's the only one that's in relatively near its historic average of 31.5. So um, these tend to be a contrary indicator. So the lower that the bull number goes, the more likely it is that we have a rally. We've already had a rally, and we'll have to see how that number looks tomorrow. I will be back first thing in the morning. Hope everyone had a not horrible day.